The question I have under the surface here is, what does it really mean for more activity moving off exchange?
Yeah, I think, first of all, thanks for having me. I think part of it is basically, yes, reaction to the last year events, a collapse of FTX, general, like people not being super excited about storing their assets on exchanges as well, especially centralized exchanges. And so people are looking for basically to deal on OTC side of things where markets are potentially, well, where they're effectively protected by connecting to approved custodians, by connecting to like relatively familiar setups for them, like prime brokers, for example. And I think that's basically what drives it.
I'm curious what this means for trading, especially when it comes to trading not just the core products, but derivative products here. How do you know that your money is safe when there's so many big questions around custody and so many big questions about how the derivative market has been growing around the crypto industry?
Yeah, I think it's all about basically trusting your custodian. I think basically this topic of custody, I think this Nasdaq news was quite interesting in that regard. This topic of custody will be a pretty big one over the next years. Like it's not just this year or next year, but over the next 10 years even for crypto, because it's one of the key things to figure out. And it's basically one of the key aspects of basically how spot trading would work. But back to derivatives, one nice thing about derivatives is that they're cash settled, so you don't need to necessarily solve the custody part because you can just deal with in stable coins or even dollars. And that basically solves a lot of pain points currently for anyone who wants to get exposure to various crypto assets.
Evgeny, we were just speaking with Congressman Frank Lucas about the efforts underway in the U.S. Congress to create some regulatory clarity for digital asset markets, delineate what the SEC and CFTC each have authority over. In the absence of that regulatory clarity here in the U.S., how hindered is the industry?
I think a general trend that we see is that a lot of protocols, a lot of exchanges are just being on a very careful, safe side by simply closing them completely to US at the moment. So like we know protocols, we know exchanges that are just being completely closed off. And I think this trend will continue until we get this regulatory clarity. And what we'll end up with for US investors, for example, is they will potentially be sidelined from like whatever new exciting things happens in crypto.
Give us a picture of what it looks like under the surface here. Is there a question of liquidity being robust enough given the amount of players that have stepped out as they're awaiting regulatory clarity?
Yeah, it's an interesting question. On one hand, we definitely see a number of US-based competitors of ours pulling out of crypto markets completely. On the other hand, I can also see that for example, European prop trading firms are scaling up. We see increased competition from that side. Asian prop trading firms are still around as well. So it's basically kind of like shifting competition, which is natural. And I think it's like for us, it doesn't really change anything from that regard. And for the market as a whole, liquidity might be less on centralized exchanges, but for example, OTC competition is pretty significant.
How much money is actually moving offshore based on what you're seeing today?
Yeah, that will be pretty tough to estimate and kind of separate from general bear market volume drop. But yeah, my guess would be, well, I mean, if you simply look at Binance volumes, for example, they are, well, significant double-digit percentages, and they're like multiples of their rivals in US, for example. So that's already one interesting point to look at.